Hi, Charlie.
Hey, Caryn Ryan, I can see you. How are you?
Good, good. Is it just we two right now, or are we on?
We are live.
All
We are
right.
live. It's 11 o'clock, so we are going.
All
This
right,
is
great.
exciting. We've got a couple hundred people that are joining us today, and I'm really excited. We've heard, I mean, literally tens of millions of dollars have been funded for ministries that we work with for the Paycheck Protection Program. And at this point, all of those are loans, right, Caryn?
That's true.
Yep, they're loans, and Caryn is going to help us figure out the way that we can maximize forgiveness of your Paycheck Protection Program. You know, we're really fortunate here at Church West. We've got, I just want to be clear, I'm not the expert on this at all. I'm learning about this a lot. We've got a lot of questions. I really enjoy I really enjoy hearing from people, and you know, I just got a message here that there's, you can hear me, Caryn, right? Somebody, Frank, you're having trouble.
I can hear you.
I think everybody else. So, you know what, Frank, we're going to have this recorded if you miss it, and so we'll record this later on, and we're going to be having some other resources that we'll be pointing you to as well. And that main resource is Caryn. Right now, it's not Church West, it is Caryn Ryan and the folks at Missionwell. I really like the fact that we're kind of known as having a guy for everything. And this situation, that guy's name is Caryn. And Caryn, so if you can kind of lead us through it, if you can help us through it, and I really appreciate it. So Caryn, thanks.
Well, thank you, Charlie. I appreciate the opportunity, as always, to collaborate with Church West on these seminars. And I was just thinking this morning about the fact that we were just doing the webinar on how to fill out your Paycheck Protection Act loan application, and it's only been 5 weeks since that very first one. And it's been only 5 weeks since the SBA has opened its window and banks have been taking applications. So lots changed in those 5 weeks, and some of you actually have your loans. If you didn't get them in the first round, you probably got funded in the last week or so. Some of you may have decided you wanted to hold off and see, and so you still haven't applied. There's still a little money left. So if you do decide you want to apply, please do. Let me just go ahead and say that it's great to see you. If you were here for some of the earlier webinars, and it's been a long 5 weeks, and my hair is longer too, because none of us can get our hair cut, right? We're all going to turn into hippies at the end of the day. But
I know, I'm looking at right now, Caryn. They're a mess. So.
We're going to be offering haircuts to each other next for our quarantine activity. Charlie, do you see my screen?
Yes, ma'am, and everybody else should see your screen too.
Okay, great. I want to just be sure everybody can see that. And then let me just walk through here with a disclaimer right up front. We are a virtual office, and we support churches and religious organizations and nonprofits with a whole variety of services like gift handling, accounting, human resources, consulting, on HR items, you name it. But we are not attorneys, and we are not CPAs. But as an outsourced business office, we have completed an awful lot of PPP loan applications. And we've also assisted, if we didn't complete them ourselves, we assisted a lot of our business partners to complete them. So we've seen a lot. And we expect to be giving the same help for the forgiveness process. We're immersed in that already. And you know, if you've taken a look at the forgiveness criteria, you may already be quite confused. And so we feel like it's our job at Missionwell to help get people unconfused. So let's talk about what we'll do today. Charlie's going to be my timekeeper and keep me honest. The webinar scheduled for an hour. Our prior webinars have gone a little longer because of all the questions. So we'll go for the hour. We'll do Q&A as time permits. We want to get through this material. I know Charlie will keep those questions. He'll be looking at them, and he'll be as we go on, as we get in a certain distance, he'll start interjecting, I'm sure, a couple of the questions. So our goal today is to help you maximize your forgiveness. Now, I don't mean maximize it willy-nilly, I mean maximize it wisely. So maximize to what you want it to be. And I'll talk about that as we go on. The goal here is to help you plan despite the complexity of this topic and to offer some conservative guidance to you so that you have the best chance of getting your loan forgiveness. And that's important because I think we're entering into an environment where we're starting to see the Treasury Department and the SBA and Congress, they've felt a little chagrined with some of the loan applications in phase 1 of this. And they're starting to say we need to clamp down a little bit on the program. So, you know, we as churches, ministries, and nonprofits need to be, you know, careful to be doing everything just right and making sure that there's nothing to clamp down on when it comes to our sector. We want to, you know, follow the Bible and let our yes be a yes and our no be a no. We want to also help you manage through all this uncertainty. This is an uncertain time, and the forgiveness itself is not as straightforward as you might think. There's a lot that we just don't know, but we want to today get you to the point where you're not worried about what you don't know. You feel like you can move forward with certain steps right now, despite some of the unknowns, and take action and move forward. So we're going to first talk about the status of PPP loans and then 4 steps that you can take right now, get going on right now to maximize your loan forgiveness, and then we'll open it up to a Q&A period. So the Paycheck Protection Program, this is a little overview here. The CARES Act was passed on March 13, or proposed, I guess, on March 13. It was actually signed into law until March 27th. $349 billion was allocated for the program, and that was supplemented a couple weeks ago with $310 billion. The forgivable loan, the loan is forgivable if it's used to cover payroll costs, and it also, in addition to payroll costs, can be used to cover mortgage and interest and rent and utility costs during this covered period, which is called the forgiveness period. It's 8 weeks. The 8-week period starts on the date your loan is dispersed. So let's just say you had a loan dispersed Monday of this week. That is day 1 of your loan forgiveness period. Okay, your loan forgiveness period that will go out 8 weeks, and it will end the Sunday of that after the 8 weeks passes. That is your covered period. That's your forgiveness period. If you have amounts of your loan that are not forgiven, let's just say you had a loan for $100,000 and $80,000 gets forgiven, then the unforgiven portion, the remainder portion after forgiveness, converts to a 2-year loan at 1% with a 6-month grace period. And interest is going to accrue on the unforgiven portion from the date that the loan was dispersed. So that's about the best loan I've seen. I don't know about any of you guys. Maybe you've got access to better money than that, but that's still really awesome. Actually, really, really awesome. These loans, as you know, have come from lenders and other organizations, not directly through the SBA, very unusual, and they've been extended to nonprofits and religious organizations, typically that are not eligible for SBA loans, again, very unusual. And technically, this program remains open, and it will remain open until June 30, 2020, but it's on a first-come, first-served basis, so when the money runs out, it'll probably be over. Some people have said, will there be a 3rd round? I don't think so, because I'm looking at how slowly the money is being spent. I'm going to show you that in just a minute. Chances are this will be it.
Hey, Caryn.
Yeah.
Caryn, some ministries have gotten back to us and said, we have not been able to get funding through our bank. They've been a mess. They've ignored us. We even have people say that their banks say, oh, religious organizations aren't eligible. I mean, you know, where should they go now if they haven't had any luck? If people are just tuning in and haven't done it, who's still accepting loans?
Yeah, if you're a religious organization, if you're Christian, we've had really good luck with America's Christian Credit Union. They are directly taking applications and they're directly inputting them to the SBA. And so that would be, I think, a really good option for people if they haven't had a loan yet. Also, there are humans there. So that's really nice. If you're a church and you're frustrated because you've been working with Bank of America and Wells Fargo and nobody has returned your call for the last 7 weeks, then they're a good alternative too, because a little bit more personal touch, and of course more interested in your Christian ministry as well. The rules do continue to change and evolve every couple days, every week, every 10 days. The periodicity changes, but there's something new, some new guidance that appears on the Treasury website or the SBA website. So you have to keep going back and looking to see what's happened and what's changed with the loans. The SBA updates their frequently asked questions. The Treasury puts out new interim final rules. And so things are changing all the time. And the latest thing that went on is this repayment date was moved from May 7 to May 14 if you really do have alternative sources of liquidity at your ministry or at your church, and you took the loan anyway in good faith. But now, having looked at some of the SBA new guidance that's come out, you decide, oh, I'm actually not eligible for this loan. There's no penalty to return the money up through May 14. So that's the latest thing that's just come out. Let's look at the current status of the program, just for fun. Phase 1, information here is as of April 16, the money was all gone. The phase 1 money was all gone basically by that point. And phase 2 is as of this week, as of Monday. So just looking at this, you can get the sense that phase 2 is occurring and unfolding very differently from phase 1. The PPP loan count, if you look, wow, that's a lot more loans that have been processed in phase 2 than in phase 1. The dollars approved are less though. So when you look at the average loan size here, the average loan size has fallen from over in excess of $200,000 down to $79,000. So finally, they're working with the small organizations or smaller organizations. And we've seen some of our business partners who are now getting loans for, some of them needed $30,000, right? That was their loan size. And those are getting approved now as they work their way through the backlog. So however small it is, chances are at this point in time, you can now get in there and have more confidence that you can get your loan. And there's a lot more lenders too. Who sets the rules for forgiveness? How does this all work in the background? So Congress is the one who passed the CARES Act, and the basic guidelines that they put through in that act, and that act is, it's an inch or so thick on paper, printed both sides. So it's a long act. But they basically laid out in there, in a small section of that, laid out all the principles for how the PPP program works. And they appropriated the funds also. The Treasury Department, and the Treasury oversees the SBA then, they're responsible for implementation, including providing more clarity on the rules and policies that Congress passed. So again, as I mentioned, they update and try to make things more clear via updates to the interim final rules, and also by updating the FAQs. And so those are your two main sources of new information, is to go look at those things. You can look at them either on the SBA website for the FAQs or on the Treasury Department website if it's the interim final rules. The SBA is the guarantor of the loans too. So they have a real concern because they're the guarantor, and of course that flows straight up to the government, but making sure that there's no fraud, and making sure that the proceeds are being used for the purpose that they're intended. Keeping in mind, the federal government put this program in place so that we would continue to employ people. That's the sole purpose of this, is to continue to employ people. And you will see that all the decisions that the Treasury Department has made in respect of putting more definition on things is all toward that goal of us keeping more people employed during this period. Your lender is responsible for issuing the loans and will also administer the entire loan forgiveness process. They might sell your loan, and they have to follow the rules, but they have a lot of latitude, and that latitude is what creates a lot of confusion. And so those of you who worked with your banks during getting the loan and were talking with other people probably realized you had a totally different experience depending on what bank you were working with. If you were working with B of A, you had an immediate online application. If you were working with Chase, you had a totally different look and feel to their application, and what they asked for was different from what B of A asked for. If you're working with a small regional bank, then you might have even had a human being who was coaching and guiding you through the process. So your experience is quite different depending on who your bank was.
Hey, Caryn, now that ministries have gone through this, if they've been funded but only received a portion of that money, some people are saying, hey, we applied for more, we felt like we qualified for more, but we only got a portion of it. Can they reapply, or is it kind of one and done?
Well, actually, interestingly, I was speaking with a lender yesterday on that very topic, and they thought that perhaps what would have to happen to make that work would be to return the loan, because you can't have two loans outstanding, and then start over and reapply from scratch. So that might be the only way to do that. And again, I think there's where, to some extent, there's a real, we did see, by the way, we had some of our business partners that put in like 3 applications, and like one application would come back saying, we've approved half of what you asked for. And others came back saying, you're approved at the whole amount. So the bank did make a difference what bank you were with in terms of how much you got. But I would just recommend, if you have a real big concern, if your loan was reduced hugely, that you go back to your lender and ask them about the risk of returning that loan and getting another loan. One thing that I think many bankers cut out was the minister's housing allowance. And therefore, if that's a significant piece of your loans, then I would suggest going back. I think other banks asked for what they thought that you were going to be able to get forgiveness for, and they cut your loan down to what they thought you'd be able to get forgiveness for, even though that's very hypothetical at that point in time. They cut the loan down. So every bank took a different approach, and I think the point that I'm making here on the slide is that the banks have latitude for how they administer these programs, and you're going to have a different experience from bank to bank. But the reason they're applying that latitude is because that's exposure to them. If they don't follow the rules, and as they think the rules are meant to be followed, then their compliance officer is going to say, you've created exposure for the bank that the SBA could come back and reject and say they won't guarantee this loan. So the bank doesn't want to have a loan that's not guaranteed by the SBA on their balance sheet. These loans are intended to be guaranteed by the SBA and be low cost to the banks.
Okay.
The other interesting thing about the lenders is that they really can't sell those loans back to the SBA or anyone else, the forgiven portion, for at least 7 weeks. So the whole time, during this forgiveness period, for most of it, your bank also has exposure there, because the forgiveness is unproven and they haven't been able to sell the loan yet. Here's some of the roles that are involved in forgiveness. I've got a borrower role and a lender role. You're the borrower there, and when it comes to the forgiveness, there's going to be a forgiveness application. So you're going to actually apply for it, just like you apply for the loan. But in addition to that, you're going to have to provide the verification for everything you're asking for forgiveness for it. And this is what so far has come out in terms of guidance from the SBA and the Treasury Department in terms of what a bank might possibly ask for in order for verification to occur. So again, the bank needs to just, will probably end up looking over what you sent to be sure that it's there. They'll probably end up even making sure that your totals tick and tie. But the SBA, they're also going to be allowed to rely on a certification. So you're going to submit the verification of your full-time equivalents, FTE, full-time equivalent employees on payroll, and the pay rates for all the appropriate periods. And the verification for those will be via payroll tax filings as reported to the IRS, maybe some other filings for unemployment, for other payroll filings, other state filings. So wherever payroll-related costs are filed, then there could be substantiation that you're going to be requested to provide for those. Documentation verifying payments of covered expenses like canceled checks for your utilities, for your rent, your mortgage. You're going to have to provide the documentation on that, whether that's a receipt, a statement, something. And then there will be another certification. You remember during the loan process when you actually submitted the loan that you had to certify, somebody at the organization had to certify saying everything that they've asked you is true and correct, that you need the loan, that is going to be used for the intended purpose, et cetera, et cetera. So there will be another certification that you used the loan, this forgiveness, for the intended purpose too. And then I love this one, any other documentation that the SBA feels is necessary. So again, what is that? I don't know. But it's pretty funny. It's like I mentioned in the PPP loan application that the information section, how long does it take you to do this loan application? It said 8 minutes. So this is another one that reminds me of that. It didn't take 8 minutes. It might have taken 8 hours or 8 days, but it didn't take 8 minutes. And this one is a wild card.
And they're coming out with things in the next couple of days or imminent, right? More guidelines imminent, but again, those are probably not going to be final guidelines either, right?
That's right. Everything keeps evolving every week. So, typically you're safe that the rules that are out when you apply are what they're going to hold you to, or they're going to give you time to fix things. Those are the rules. On the lender's part, they have a pretty limited role here, but they're going to take it seriously. They issue the decision on the application for loan forgiveness within 60 days of getting it. So the law doesn't say when the forgiveness is due to the lender, but once the lender gets it, they've got 60 days. And they are held harmless if they get that information that's needed, and as long as they get the certification from the borrower that they've used it for the correct purpose, then the bank is held harmless, and the SBA will continue to guarantee that loan. All right, so if there's a problem with the loan, it's not going to be the lender who gets in trouble. As long as they've done their duty, it's going to be the organization, the church, the nonprofit, the business, whomever, that's going to be asked the questions. The lender will get paid for the amount of forgiveness within 90 days or sooner under some circumstances. So those are some of the basic rules. And again, the banks will give you more detail on how they plan to undertake those as we go through. So what I'd like to do now is actually turn to what is it you can do right now to be sure that you're maximizing your loan. And we have got 4 steps here that we think are going to be great for you to start working on right now to make sure that you can maximize your loan forgiveness. So these 4 steps are: number 1, target how much you want forgiven by preparing a cash flow forecast through 2020 at least. Now, this is an important step, and you might be inclined to say, I don't need this, I just want to maximize my loan forgiveness. But let's talk about that in a minute. And the second step is budgeting your covered period forgiveness amount. We have some tools that we think can help you with that, and I'm going to walk you through the process at the high level today. And if we have another webinar, then we'll go into more detail as we learn more too, because there's still a lot we don't know. The third thing is to set up your systems to substantiate your expenditures as you go. We'll talk about what that means, but you don't want to get to the end and be wanting to apply for your forgiveness and going, where's that receipt for that utility bill? Or where's my payroll information that I need? It's best to just have that ready, and then you get to the end of your forgiveness, you fill out the application for your lender, it's all done, you're providing the substantiation, and off you go. And then also working with the lender right now, many lenders, just as an FYI, do not yet have the forgiveness application. So if you call your lender right now, even if they will return your call, chances are they'll say, I don't have my forgiveness application done yet. But within the next week or so, they should have those, because the first round of loans funded the week of April 6th. And therefore, if you start thinking forward, we're 4 or 5 weeks in for the first round already. And so forgiveness for those loans will start in about 4 weeks. So the forgiveness application needs to be coming out from the lenders in pretty short order so that people can actually get their forgiveness amounts.
So Caryn, your advice is even though we don't have the applications, let's start getting our documentation ready.
Exactly. And let's do your planning right now. Even if you don't have your funding, there's things we can do in steps 1 through 3. Let's work on those. We can do those, and those are going to be really helpful if we do them. Okay? You got it, Charlie. So step 1, let's talk about that, preparing your cash flow forecast through 2020 at least. Now, when Congress passed the CARES Act, there was a strong feeling that what this period we were entering into was short, that it would be done and dusted and things would be back to normal by June 30. So there was really some thinking that this is a very, very temporary situation. And I think what we've all learned since that time is that it's a lot more complicated than that. Even when we go back to work, you know, there may be limits on how many people can go to the office. Even if we start having church again, there may be limits on how many people can come together and congregate. How all that unfolds, we don't even know. If you're in a state that's really super cautious, it may unfold slower and with lower numbers. And if you're in a state that's pretty aggressive about reopening, it could unfold faster and with higher numbers. But it's not going to be business as usual because there's going to be social distancing. There's going to be, we hear, more rounds of infection, and those then are going to have their own consequences again for social distancing, for staying at home, etc. So we don't really know how long this is going to take. And I think then, therefore, there's a measure of prudence that suggests. Whether there'll be more money made available is anyone's guess. But for now, it might be better to be prudent because probably the money is not going to be made available before June 30. And so you're going to be through your forgiveness period. And it's just good to think through. Do you want to maximize your forgiveness or do you want to maximize your liquidity and your money? Keep in mind that forgiveness means you spent the money and there's no money left. And so you really need to go through and evaluate your other sources of funding. To think about your gifts, think about your operating reserves, think about other sources of funding, and decide if you want to move to full employment. The government hopes you do move to full employment, but even that, I'm sure they're starting to think, well, what happens after these 8 weeks? There's no way we're going back to full employment. Our unemployment right now is over 30 million people, and it's pretty horrifying right now, you know, what the unemployment is. So we're not going back in June 30 to, you know, full employment. That's not going to happen. So now all of us need to be thinking through what the right thing to do with the money is. Is it best to get full forgiveness and keep your employment high during this period? Or is it best to not worry too much about the forgiveness, just it is what it is during this period? And then, you know, keep the money, keep the loan, keep the rest of the money, because as we talked about right up front, it's 1% money. There's a 6-month grace period. It's due in 2 years. That's very good terms. So if you need operating reserves or liquidity, it's just worth thinking it through. I'm not recommending one way or the other, except for that you think it through.
Hey, Caryn, so theoretically, they could have the same amount of revenue coming in, and they could be setting that aside and building their reserves and using this loan money to fund their ongoing operations.
True.
Okay. That question's coming up a lot because people are saying, hey, we're doing okay. Our churches, you know, we're closer than ever. We're growing. We're reaching more people than ever. But this is going to drag out longer. And I think that this is an opportunity for ministries to build that little bit of a war chest in case it does get worse. And I think it's good stewardship to plan ahead. And this is, I think, a great opportunity. So if you're questioning whether or not you got to be doing it, I think you're crazy not to. So, okay, go ahead. Keep going, Caryn.
Great. Okay. So there's a couple of, just thought I'd mention a couple of situations that we've seen with people who are kind of puzzling about this question of, you know, do I maximize my forgiveness or, you know, do I maximize the money in the bank? There's a school with a summer break that starts in the middle of the loan period. They can't maximize their forgiveness vis-a-vis the base period because they let their employees go, right? In a week or two, their employees will be gone. So they're like, well, we could keep those employees and have them do other things, or we could have a lower forgiveness and just have the money available for when school starts back up in the fall, but then we have to pay it back. So those are the kind of things that people are wrestling with. And here, there's any activity actually affected by social distancing. I can think of a Christian camp, for instance. If you're not able to have the camp and registrations aren't happening right now, it's kind of hard to get your employment all the way up, right? So in that case, do you want to maximize your employment, or do you want to leave the money for a later time? There's sometimes things that you can get people to do that make sense, and then sometimes it just doesn't make sense. So, you've got to think about all these things, and I know everybody's situation is different and complicated, but our suggestion is that you do your cash flow forecast, at least your 2020, and you at least think about these issues so that you're making good decisions about how much to get forgiven and how much to hold for later on. Step 2, budgeting your forgiveness amount and then monitoring your budget. So first of all, let's go through what should be in that budget. I think the budget makes sense because if you get as much visibility as you can get to how big your forgiveness amount is going to be, it helps you with your planning. So our recommendation is that you do kind of a weekly, just put together an 8-week chart, and that the week that your bills hit, put those in, and the week that your payrolls hit, put that in there, and kind of keep track of how much you've used up for your forgiveness. And we'll give you some better tracking ideas, some more specific tracking ideas shortly here. But this idea of an overall budget and just kind of tracking your progress and seeing if you're getting close to what you thought is an important one. It'll just help you feel more in control. It'll help you determine if you need to slow down spending, speed up spending. There may be times where you're going to need a special payroll or to pay bills in a special or different way. And this is how you're going to find out by doing this budgeting everything kind of normally, and then saying, oh, I'm not happy with the amount of forgiveness I'm getting. I want to fix my assumptions. This is the place where you're going to test those and get your forgiveness to the place where you want it to be. If you want to maximize your loan forgiveness and you put everything in and you still have money left, then you're going to start looking for other qualifying expenses. So it's an important exercise to be sure that you really can get the loan forgiveness either maximized or exactly to where you want it to be. What qualifies as forgivable? Well, first of all, payroll costs due. It's the same definition of payroll costs that was in your loan application. There's been no change. So it's the salary, it's the minister's housing allowance, wages, taxable allowances, it's tips, vacation and sick pay, parental leaves, and all other leaves that are paid as well. It's group health care, it's other benefits, it's severance and other separation costs, it's insurance premiums, it's retirement contributions, whether those are 403B, employer contributions to 403B, or just defined contribution retirement plan payments. It's your state and local tax payments that you make that are assessed based on payroll. It's all of those things. So it's the same exact definition as it was. The mortgage interest is the second category now that's allowed. The mortgage interest would be on either real or personal property. I've seen a lot of questions about, look, does my interest on my copier count? And when you're thinking about that, the fact that they put personal property in here makes me think, well, put it in your budget for now and highlight it in yellow, and maybe we'll know as time goes on if that kind of personal property mortgage will count or not. We don't have the answers right now in terms of what counts for mortgage. We think maybe construction in progress would count maybe as mortgage, and the interest that you're paying, if any, on a construction loan might count, but we don't know that. So we do need more guidance in this area, and but put it in. My suggestion here is in your budget, put it in, and then just highlight those lines that you're uncertain about, so you can track them. And as we get the answers, you can plus or minus them quickly and adjust your budget.
Hey, Caryn,
yeah.
before we go on too far, there's a lot of questions that have come in about payroll costs. And one of the things they said 75% minimum. So is 75% salary, or is 75% all payroll costs, which would include all of those things?
Oh,
Vacation time.
That's a great question, Charlie. So the 75% is going to be on all of those payroll costs, all of them. Okay, so when you add up all those payroll costs, those need to be for your forgiveness, 75% of the cost. All these other things, mortgage, interest, rent, utilities, those can only be 25%. Okay.
Okay.
So that's
what
how
about unemployment? When they have, some ministries have a self-funded unemployment plan, would that be included in payroll costs? I kind of think that the goal is to get them off of unemployment, right? You'd have to hire them back.
If you're paying into a self-funded unemployment plan, as I understand it, with certain qualifications, those are eligible as payroll costs. Yeah, those are eligible.
Okay, cool.
Yeah.
There you go, Julie. All right. That was. Let me just do a couple of things. So Vanessa asked that. Julie asked that. It's been a little bit inconvenient because the funding has come in sometimes in the middle of pay periods and things like that. We're getting a lot of people that are saying, can they wait until their next pay period to start it? But I think, as you said before, it needs to start the day that funding began. Is that you receive funding? Is that correct?
That's when that is when your forgiveness period starts. That's hardwired. There's nothing we can do about that. But on the payroll, we'll come to that again in a minute. But you know, I think we're suggesting being conservative, and I've seen other firms suggesting the same thing. We're suggesting that you fit in as many payrolls as you can, and that, like, for instance, there will be the first pay that you make may not apply totally to the period, the first, paycheck that you do. So, you might end up having to allocate some of that out. All right. We don't know. And at the end, let's just say this is an 8-week period, and let's just say you pay twice a month. Well, you're going to miss a payroll. Even if it were starting perfectly at the very beginning, you're going to miss a fourth payroll. So our suggestion is, well, maybe, and maybe you won't have to do this, but start thinking now about doing a special payroll at the very end to catch up your payroll through the period. So these are all things that I hope that in the next week or two we get more guidance on. I know the AICPA is talking to the Treasury Department about trying to conform the loan forgiveness periods a little bit more with payrolls, but I'm not sure where that's going to go, and we don't really have any guidance on that right now. So for right now, I think you need to be conservative, and we'll get into this. We'll talk about this more in a little bit, but to be conservative, assume that your expenses both need to be incurred and paid in this period. And that's the definition that's going to give you the most chance of getting everything forgiven, is to be sure that it's been incurred and paid in the period.
Can somebody arbitrarily give a bonus at this point?
So in terms of arbitrary bonuses, I've had a lot of questions from different people about that. How about if I pay a year-end bonus right now that I always pay at year-end? Well, if you paid at year-end, you paid at year-end, so I wouldn't pay it in this period. It's going to have the appearance of trying to maximize your loan forgiveness and not being aligned with the intent of the PPP loan program, which is really focused on the payments that you usually make now in this time versus the payments you made during the base period of time. So I would avoid really truly things that are quite different. Now, let me tell you about some things that I think would be okay. If you have employees who you can bring in to do a special project and keep them employed, that's great. You're giving them the regular paycheck that they made during your base period, and they're getting valuable work done, and you're keeping them employed. So just because you changed what they do, that's fine. The government wants you to keep those people employed. So have at it if it's employing them. But if it's bonuses and payments that don't really apply to this period, I think advise caution on those things.
And our webinar next Wednesday is talking a little bit about that as well for managing the HR. But yeah, you're right. You know, if you've got preschool teachers that are normally preschool teachers and your preschool is shut down, you can continue to pay them, but have them do other ministry work. Okay, exactly. I should know the answer to this question, Caryn, but it says, are work comp premiums part of the payroll costs?
That's up to your banker. My suggestion is that you add them in and highlight them in yellow. And then your banker will either allow them or won't. Some of you already know whether your banker allowed them for the calculation of the loan. If they allow them for the calculation of the loan, you're probably in good shape and you're going to be able to get that in the forgiveness period too. So,
but most
bank specific.
And so I would say probably not, but I think because most have said no, so I wouldn't count on that. On that one. I don't know what comp rates are so good. I would go with what your bank allowed in the the initial loan application. So some banks allowed it. Okay. Okay. Yep. Let me just see. We've got 53 open questions here, so I just want to make sure we're kind of addressing some of the payroll ones right now, if we can. Bonuses, we looked at that one. What is the what about payroll taxes that are still due prior to loan funding, but not during the 8-week period? So we owe back payroll taxes. Would that be included as payroll costs? That's a great question. That's one of my key questions is, you know, for things like that were incurred before the period, but not paid until in the period. And those payroll taxes are a great example. There could be other examples too when we get to rent and some other costs, and we're just going to need to wait for the guidance. For now, I'd put it in your budget, and I would just, as we get more clarity on that, then you know you're gonna be putting that in, putting it out. You want to be sure your budget's stuffed as full of things as you know as makes sense for you based on what's your cash flow forecast, and you know based on what you've decided you want to do for 2020. But if it's questionable, put it in. And then hopefully we'll have more guidance for you the next time. And you're saying build a cushion here too. Don't get that 75% penny because you may get some things disallowed. They're probably going to have to disallow things, I think, just to, you know, show some that they're really looking at it. Let me give you a scenario real quick, okay? Money received on April 14th. You love this, Caryn. You admit it. All right. Money received on April 14th. Payroll is on April 15th. And it's semi-monthly payroll. Do you think they'd be able to get the fourth one in? What do you think? No, they won't. They won't get the fourth one in, even if the payroll is just like they described, because 8 weeks is less than 2 months. So in that case, you know, hopefully by the time we get closer, we'll know. But I'm already thinking, and I know a lot of people are thinking, and I've heard some churches that have already done this. They've talked to their payroll provider and said, we're scheduling a special payroll on this day. And they're going to catch their payroll up on, you know, around the end of their PPP program. They're going to catch their payroll up. So this, you know, this question of what's incurred, in other words, did it apply to the period, and what was paid in the period, they're going to make sure that they overpaid and that they get everything that they've incurred paid for in the period to be absolutely sure. Now, I don't know if that'll end up being the way that it works out, but you can see already that there's churches who are you know, bound and determined that they're going to get every nickel, and this is what they're planning to do. I want to make a statement here too that some of your payroll companies will run a special report for you too. So if you're starting to think about, oh my gosh, this is all going to be so complicated, how am I ever going to track all this? And I'll come back to this again later, but keep in mind your payroll company might help you on this. I know we've been talking with our payroll company for a lot of the one who supports a lot of our business partners, and they're open to developing a report for us. So there could be some help. Yeah, okay, so just quickly, does that include employer paid short-term and long disability? That's yes, right? That would be included for disability as the payroll cost. The only, please confirm that only the employer portion of group health care is covered as payroll cost.
Confirmed.
That's true? Confirmed. Thank you. Good. That was quick. Can you play bonus? No, sorry.
Only if it's a regular bonus that you would pay during this time anyway.
Okay. Hey, somebody put this anonymously. If we pay medical bills along with insurance, can medical bills be considered as other benefits? No, you're not supposed to be paying their medical bills. That's contact me directly on that one, because that's something that's a little bit tricky. Okay, here's one. Should we label additional compensation for existing employees who are working as essential workers? Could we add like pandemic pay? You know, Amazon is giving pandemic pay. Can a church add pandemic pay? All right, cool.
If there's a rationale for it, I don't see why not. Again, you know, just keep in mind, you know, just the reasonableness test. But if they deserve pandemic pay and there's a need for it, if they're like, let's just say your church is doing a food pantry and you're paying people that's not all volunteers at the food pantry and they're exposed, frontline workers, well, there's a reason for adding something to their pay. So, or if you're just struggling to keep people in a particular area of ministry, because, you know, I know some,
Okay.
you can't, from an unemployment perspective, they have to have premium to get them to come off of unemployment. So, you know, I think there's various reasons that it's going to make sense to add a pandemic premium, and there's other situations where it won't. I just say, you know, be reasonable. Let me just keep moving, Charlie, because I'm looking at the time, and I want to get through at least the next 2 or 3 slides before we can come back. We'll come back, okay? So the mortgage interest, we talked about that. It's only if the mortgage was in effect before Feb 15. Rent, same thing. The lease has to be have been in place before Feb 15. And utilities, if the service began before Feb 15. Anything that you've started since that time won't count. The law specifically does mention electricity, gas, water, transportation. I'm always like, well, what is transportation? And I'm not really sure. Telephone and internet access. So some of you have asked the question in before the webinar about internet access. What about for employees at home if you're paying an internet stipend or an expense reimbursement, not a stipend, but an expense reimbursement to them? Would that count? What I've seen so far indicates that probably, yes, that will count. So put it in there, put it in yellow, but probably that will count. And then, and I don't have any information on this EIDL, but any amount of your EIDL to be refinanced might end up affecting your, and please don't ask me questions about that because I'm only just noting this, but I don't have any answers for you. I'll try to get more as time goes on. So again, the Treasury SBA guidance is imminent. So it means tomorrow, if it means next week, but as soon as it's done, Charlie and I will work together and we'll try to put together another webinar with more guidance for you, okay? There are 2 limits that apply when you're you know, for your forgiveness. So you're going to put your budget together. You're going to kind of understand, you know, what the gross amount of the forgiveness is during that for the expenses during that covered period. But then there's 2 things that might reduce your forgiveness. And even these, it's not exactly clear how these work. So we do need more guidance on this from the SBA and from the Treasury too. But let me go through at least what we do know. Okay, so if you have a drop in full-time equivalent employees from a base period, if you let people go or cut their hours back, then that is going to create a reduction, a proportionate reduction in your loan forgiveness amount. So if you cut 30% of your employees' hours, then you're only going to get 70% of the forgiveness. Okay, so that's kind of the principle in terms of how it works. You're going to calculate this ratio. You're going to look at your average FTEs during the covered period. The covered period is the forgiveness period, those 8 weeks, and you're going to divide that by the average FTEs in the base period. So what is the base period? The base period is very confusing because, especially if you're seasonal. If you're not seasonal, it's not so bad. You know, you're going to pick one of, if you're not seasonal, let's go through that first. You're going to pick the first or the second of the options here on the slide. You're either going to pick Feb 15 to June 30 or Jan 1 to Feb 29, 2020. Those are your two options for a base period. Pick whichever one works better for you. Okay, if you had fewer employees in Jan-Feb than you did last year, Feb 15 through June 30, pick Jan-Feb. If you had fewer employees because you've been growing in Feb 15 to June 30, 2019 than in Jan-Feb of this year, then choose the base period of last year. Pick whichever's least because that's going to maximize your loan forgiveness. Okay, now if you're seasonal, you can pick that main period, Feb 15 to June 30, or you might be able to pick any 12-week consecutive period within May 1 to September 15, and there's been a couple of other periods proposed too. So it's a lot less clear if you're seasonal. That's a place where we're really hoping that there will be guidance because right now it's very, very unclear how it works. The law does say that the average FTE per month calculation is going to use the average FTEs per pay period that falls within that month. So when you're calculating a monthly FTE, you're going to use whatever pay periods for this purpose, right? So we've got 3 tests. Each test is going to have different base calculations, but for this purpose, you're going to use the however many pay periods fall in the month, and then you're going to use the FTEs in that in those 2 pay, 2, 3, 4, however many pay periods fall in there, and you're going to average those out. Now, a couple of things. First of all, some people have asked the question, what about if I make an offer to rehire an employee and at the same pay and at the same number of hours as was before, the pandemic, and they turn me down? And employees are turning people down. We've seen this. They're turning people down. There's a lot of unemployment pay out there right now, and they may have kids. They may have a lot of personal circumstances that mean they can't take that job. If you made a bona fide offer and you documented it, then you don't have to count that as a negative in this calculation. You can make an adjustment for that, and it won't count. Okay, so we have had guidance on that. Okay, so that's one calculation, and that's going to be the primary way. This is going to be the primary way that your forgiveness is going to get reduced. So you do want to focus on this calculation because this is what's going to be important in maximizing your forgiveness. Now, it's not the only calculation, but let's look at the next one. I've gone the wrong direction. Okay, the next part of the calculation is going to be looking at drops in wages and salaries. So now this one is going to look strictly at the cash compensation that you paid people. And the base period in this case is going to be the first quarter of 2020. So now let me go back. You had various different base periods here that are going to apply for your FTE calculation. And as confusing as this is, for this calculation, you're going to use the first quarter of 2020. And you're going to compare the pay of the people in the 8-week period on an adjusted basis to, the 8 weeks the average of in that first quarter of 2020. And if the pay fell more than 25%, person by person, if the pay fell more than 25%, that amount beyond 25% that the pay fell is also going to be reduced out of your forgiveness. So let's just say you were paying somebody in the 8-week period. Let's just say that their pay came out to $10,000 in the 8-week period, and in the comparable period for the first quarter actual payrolls, that was 15, or let's just make it $20,000. Okay, so you've had a 50% pay reduction. So 25% pay reduction from the 20 would have been okay if you were at 15, but since you're at 10, the difference between the 15,000 and the 10,000 period of the $5,000, you're going to be reducing your forgiveness for. So anytime you reduce pay more than the 25%, that amount more than the 25% on an employee by employee basis, you're going to add that up, and that's going to also be deducted from your forgiveness. Okay, so keep in mind here too that any employee who is highly paid, in other words, if they even in one pay period during 2019 had an annualized earnings rate in excess of $100,000, that employee will just be not even regarded for this calculation, okay? So if you cut their pay to 20%, the government's not going to get involved with that. If it's a highly paid employee, they're not concerned. Their concern is for those employees making less than $100,000, that their pay did not get cut too far. So they're going to reduce your forgiveness if the pay of those employees who earned on an annualized basis less than $100,000 during the 8-week period than they did in the first quarter. They're gonna take that amount below the the further reduction beyond the 25% and subtract that from your forgiveness. Okay. Also, you don't include employees residing outside the United States. Okay. Now, hopefully, I haven't confused you totally. There's 2 tests, though, right? There's an FTE test, and then there's a salary test. You're going to first reduce your forgiveness for whatever. Just think of it simply. It's whatever percentage that you've cut the hours back. That's going to be your FTE. And then if you had substantial pay reductions for, those remaining people, there could be a further reduction as well. That's the simple way to think about it.
I followed you. I followed that. That made sense to me, Caryn. So that was good. And it will be rebroadcast, and the PowerPoint slide will be there. So if you missed it, I think you explained it very well. Thank you.
Okay, great. So now, here's the good news for some of you. Some of you who feel like as time moves on, you will be able to restore pay or employment by the time we get to June, the end of June, then none of this is going to apply. All that complexity I just talked about for FTEs and salaries, as long as you restore people back to the pay and have as many people as you had before, it all goes away. So whatever you did before June 30 is forgotten as long as it's fixed by June 30. Okay, so now let's talk about some of a little bit of the details of how that works. So it has to be for reductions that you made from February 15, 2020 to April 26. So if it's a reduction in prior to that or last year that you made the reductions, it's not going to count for this particular restoration calculation. So reductions are reductions that you made after the pandemic hit. So the other thing is you need to make the FTEs, restore those, and you need to restore the salary and wages. So it looks to me like if you don't do both, in the law actually has an and in there. So if you don't do both, then you don't. This factor here, this restoration factor is not for you. It does not apply. You're going to be going back to these 2 calculations that we talked about before, and those are going to apply. But this is a one-time out, kind of a, pass go, collect $200 kind of a thing. If you can meet this hurdle, and a lot of you cannot, and I understand that, but if you can, you get kind of an get out of jail pass for the period from the Feb 15 to June 30. Okay, so this is now, we're going to move on to step 2, which is budgeting your forgiveness amount and monitoring it. We talked before about the importance of budgeting. And by the way, if you're wondering what that picture is, that just me looks like this growly old guy just saying, watch it, that there's sharp teeth and claws and everything else coming out to grab you. And be thinking about it that way as you think about your PPP. The SBA and the Treasury, as time move on, are not going to get more lenient. They're going to get stricter. So, think about that. This is, just think about that monster under the bed coming out to get you. You got to stay really clean and kosher on this one to be sure that, you're going to get through. So let's go back now on the budget principles for budgeting. There's a just do it factor here, right? You're going to have better visibility to what you're doing and what you're going to get and managing it toward the financial plan that you've prepared in step 1, if you just get this budget done. So do it. Missionwell has a spreadsheet that is going to be put online. One of our staff members is working on that, finishing it right now, and we're gonna put that online for you so that you have something to use for this budget. And keep in mind, it's going to start the day your loan funds, and then it'll go forward 8 weeks. So it's going to be kind of basically a weekly budget that you're going to be dropping in your payroll and your your AP payments into. Be overcautious. Assume that if a qualified expense is not paid during the 8-week period, that it's not going to be forgivable. So you want to think about incurred and paid, right? So be overcautious and plan, put things into the 8 weeks. We've already talked about this before. Consider if you need a special payroll. And really, I think right now, because so little is known, it's going to be better to have good news when the guidance comes and relax a few things than it is to say, shoot, I wish I had done this, but it's too late, I can't do it. So, let's just all be a little overcautious and get everything into this period that you think, paid in this period that you think will be a qualifying expense. Also, I wanted to say, don't stretch it. The Treasury Department, the SBA, has already come out after phase 1 of the loans saying that 100% of loans over $2 million will be audited. 100%, all of them will be audited. So they've said they're going to do sporadic audits below 2 million, and we don't know what the criteria is and how many they'll really do. But, to me, it's more of that realization that while this was put in place extremely, and to the credit of the US government, it's put in place extremely quickly, that doesn't mean the end is going to be as pleasant as the front part was with how easy it was to get the money. This is the time now to be sure that you're doing what you need to do to be sure that you have a pleasant experience at the end of the loan too. We've already talked about the prepaids. No, you can't prepay things. We've talked about some of the situations for special or unusual salaries. I'm sure there's more cases that you want us to talk about. We'll talk about those. And then again, be comprehensive is easier to remove than to add. We've talked about when you do your budget, just highlighting things in yellow that you're not sure about, that you have questions about, highlight them in yellow. And then hopefully things will get clearer as we go through and you'll be able to go, oh, 6 of my 20 yellow things now can either be removed or just be left in with the yellow removed. So that's our thought there. And I do have here kind of a little summary for how it's going to look when you finish your whole budget. This is what, our spreadsheet will kind of get you to this point of a forgiveness summary. You're gonna have your covered payroll costs. There's, gonna be a place to input your payroll costs. And in this little sample here, your covered payroll costs were merely $75,000 in the 8-week period. And other covered costs in this sample exceeded $25,000. So in the spreadsheet, then it caps it at 25% because you need to have 75% covering payroll costs and only 25% then is available for other costs. Now, I know some of you have the opposite thing where you're saying, well, payroll is 90% of mine. That's fine. 90% and 10% is no worries, So, if that percentage, if you have 90% payroll, the government's going to be very happy with that they want you to use it for payroll. So the gross amount forgiveness in this case is $100,000. And then you've got, remember I went through those 2 slides, the FTE reduction slide and the salary and wages reduction slide. So on the FTE reduction slide, then, if it comes out that you've made reductions that exceed 50% in this example, and so, your percentage of reduction then is 46%, then you're going to reduce your forgiveness by 46%. So that's what's shown here in the slide is, 46% reduction in your forgiveness based on that FTE calculation. And then the salary and wages in this case, it wasn't too bad, but $3,500 of costs aren't going to qualify because those people's salaries were reduced more than 25%, $3,500 more than 25%. And that calculation is done person by person. So a further 35 is going to get reduced. And so you're going to have a net loan forgiveness then of $50,000, $364. So now your loan, then the remaining loan is going to be approximately $25,000 in this case. So I hope you see how that works. Now, keep in mind too, that gross loan forgiveness, if you are able on June 30 to restore all the cuts in pay and bring back all the people who you had to let go, then the $100,000 will be what you're going to be eligible for. But if you weren't able to do that, if you weren't able to do a full restoration, then you're going to get the $50,000. dollars. Okay, so you'll see both in the spreadsheet, and then it depends on what you can do on June 30. Okay, our third step, our third suggestion really is that you substantiate your expenditures as you go. So there's been a lot of talk about, do you need a separate bank account, or, how do you track these expenses to keep things simple and to, help you as you go through here. Our thinking is that a separate bank account is absolutely fine. A lot of lenders have set up separate bank accounts, but a lot of lenders haven't. You don't need to set up a separate bank account. If your lender didn't do that for you, don't worry about it. Set up a separate sub-account in your main checking account, or wherever that money was placed that you're going to be spending it from. Set up a separate sub-account in your QuickBooks or your financial system and track the PPP money through that, so you always know what's been spent, and you can keep tabs that way. Another thing that we are recommending is to talk to your payroll company now, so see if they can extract an 8-week specialty report for you. It's going to make your life a lot simpler if you can, and their report in and of itself can help serve as substantiation. If you don't get that payroll report, then consider doing special payroll reports. As you go, every time you have a payroll, do a special journal entry for that payroll into the system. Charge only the costs that are eligible for the PPP forgiveness against that account, the sub-account that you set up, and the rest charged just against your higher level cash checking account. So if you think about it, then just split everything between forgivable and non-forgivable for your payroll costs. And in some of your payroll costs, you can split it between applicable to the covered period and not applicable to the covered period. So you might have 4 journal entries instead of 1, especially for the beginning and the end, the final 2 pay periods. You might have 4 journal entries, but just get it, it'll make it simpler, because you're going to have the tracking then of what's in and out of the period, and you're going to have the tracking of forgivable and not forgivable. Okay, so those are just some thoughts. You can set those up immediately right now, and it will help you. Now, once you've got your payroll costs and your budget up and running too, you can update that budget after every single payroll run and after every single AP run, and kind of keep track of where you're going, and see how much more is left. So don't forget that. Just keep updating your budget as you go. We also recommend that you put together a file, a special electronic file for your payroll reports and your AP substantiation, if that's not accessible via your financial system. At least you'll have all your receipts all in one place, and you can quickly pull those out at the end of your forgiveness period and attach those to your loan documentation. Step 4, work with your lender on forgiveness application and package. You're like, well, they don't have anything right now. So keep in touch with them. Keep in touch with them. The lender's going to drive the specifics here, but ask them early for guidance. You don't want to wait until you come to the end. The more your lender can tell you now, this is how forgiveness is going to work, the better you can prepare and plan, and the better you can do. So ask your lender. If you're working with a lender where there's a human being there and you can talk to them, you probably got a better chance than some of the bigger lenders. And again, you're probably not going to have Bank of America, Wells Fargo, Citibank, Chase. You're not going to have a lot of say to amend their loan forgiveness applications either. But try. There's no harm in trying, and there's certainly no harm in asking, for a copy. Get your forgiveness application started early. We're pretty sure it's going to take some time. It's not going to be a 8-minute exercise, just like your loan application was not an 8-minute exercise. So get going early on that, and gather the known documentation that you can all in one place. So I've tried to list here the payroll periods that you're going to need. I'm sure this will change as we get more guidance, but for right now, you need payroll period information for the FTE limitation calculations. Most of you are going to need February 15 to June 30th. But if you don't need that, you might need Jan 1 or to Feb 29, those payrolls. Or if you're seasonal, there's a variety of options. So, you're going to work with your lender, but however it's agreed, then you're going to start collecting those if you're seasonal. For the wage and salary and wage limitation calculations, you need the prior quarter. Okay, so you need the first quarter of 2020 for that calculation. So gather that and, get that going and, input that right now into your budget spreadsheet and get the documentation collected because you're going to need both. And then for the covered period itself, the forgiveness period itself, you need all the payroll information that covers those 8 weeks. So that's a lot of different payroll periods of information that you need. And our suggestion is that you just use the opportunity to fill out your budget in the spreadsheet to collect all that substantiation and be sure that you have all the documentation that you need in hand right now. I know that's a lot. So let's do a quick Q&A. Charlie, we got a few minutes here. We can do some Q&A for people and try to answer some questions. I can't hear you.
Oh, sorry, I muted it because I'm across from a church and the bells started ringing. So normally during webinars, numbers start falling off. We've actually had kind of an increase. So thanks to you, and it's also a very complicated thing. And I have a feeling we'll be doing this again because you did great. I appreciate that. But let's burn through some of these real quick, okay? Because we've got quite a few, but we'll just kind of go on until I wear you out. So let's just see if we can answer these quick. So if everyone does not come back, but everybody who does agree to come back, will the spent part of the loan be forgiven? So yeah, that's where ministries are saying not everybody's wanting to come back. And so they're likely going to have some part that is going to have to be repaid. Is that correct?
Well, no, if they've made a bona fide offer, that person.
Oh, yeah.
Right? And the person has said, no, I'm not coming back, then they're not going to be penalized for that. The government wants you to offer to people to come back.
Okay, but then let's say even when you do, and I know it's confusing, but let's say you get to 75, you don't get to 75%, you get to 65%. Then that means you're going to have 10% that's going to have to be repaid, not the entire amount, correct?
Right. So
portion.
That's where you got the two parts. You got the FTE part and you got the salary and wage part, right? So
okay.
Restoring salary and wages, and you restore, let's just say you were on average at 50% and you restore all the way back up to 65%, then yeah, there will be a smaller deduction from your forgiveness between the 65 and 75% that you did restore. So even a partial restoration will help you.
Okay.
In terms of that, so what gets deducted. Unfortunately, it also means, again, anything that's forgiven does mean that you spent it, right?
Okay. There's a note here. It's somebody here. Thank you, Brandy. It says, oh wait, where does it say that? Oh, just bear with me 1 second, Caryn. He said number 40 in the SBA guidelines that if somebody doesn't want to come back, is that they have to decline the job in writing. So you need to document it between, you need that in writing. Is that correct?
That's correct. You need substantiation of that.
Okay, good point on that. All right, Rachel, clarify rent, is a mortgage payment considered rent? No, the interest on the mortgage payment would be included in the calculation, but your mortgage amount is not.
Your mortgage,
and something that the mortgage principal is not.
Mortgage principal.
Talking about back pay, that kind of keeps coming up. Can we use that PPP to cover back pay? Yes.
I think you should put it in for now. I'm not really sure how back pay works because in the state of California, at least, it's not legal to not make your payroll. So I'm not really sure how that works. But I know even as we've talked about rent, we've been advised by several sources to go ahead and put your back rent in. If you quit paying your rent because you couldn't for the first little while, and now you have your PPP loan and you can pay your rent, and it's for a period before the covered period, we've been advised to put that in there, pay it, and put it in there and see. So again, hopefully we'll have more clarity on that, but that is a case where an out of period cost might well be understood by the federal government. If you can pay your rent, then you can pay your rent, right? So.
Okay. Let's see, we were funded May 7th. Our pay period runs May 1st to May 15th. Is 5/1 through 5/6 included in PPP forgiveness?
That's a great question. So we're saying for right now, the spreadsheet we're putting together is allocating it. But I think it well might be. And I look forward to the guidance from the Treasury Department and the SBA on that one.
All right, we got a firm maybe. All right. Let's see, can we use January 1st to February 29th, even if we're a seasonal employer? The slide had non-seasonal reference. This is a camp. So this is, Jan runs a camp and she's got seasonal people. So the slide says non-seasonal.
I don't think that was in the seasonal options for the camps. So Jan, if you want to drop me, go to the Missionwell website and drop me a note. I'll look it up for you and I'll come back to you and give you what's been mentioned so far for the camps. But I want to make another point too. For camps and seasonal camps, that's been a huge place where there's been a lot of new guidance and new potential periods coming out. So I'll summarize where we're at, but I don't think we're done. And the guidance really is still only about the loan application size, the size of the loan. It doesn't say, oh, and by the way, you can use that base period for forgiveness. It doesn't say that, but I imagine that's an oversight, and that as we get more guidance, those periods, will be allowed for, base periods for the, it only makes sense, right? It's what you're using for the loan application, and it seems like your forgiveness would be compared to those periods that you use. But right now, there's no guidance on that.
Okay. Yeah, so Jan, connect direct with Caryn. Caryn advises a number of Christian camps in the area, so she can be really helpful with that. In terms of backup, here's one. What if we don't spend it all during the 8 weeks? Does what is left over convert to a loan?
Yes.
Yes.
It converts to a very attractive loan at 1% interest with a 6-month grace period due in effectively 2 years from the date that the loan was dispersed.
Okay. A lot of questions about paychecks and paydays and things like that. We'll be getting more clarification on that for people. I'm just going to kind of go through some of these real quick. Back pay, we talked about that. What if the 8-week period ends and 8 weeks goes by, then 8 weeks and 1 day later you lay everybody off? Everybody's fired, we shut down the church. I'm not saying anybody's going to do that, but let's say that you do have reductions following that 8-week period. At that point, are you penalized? Is there anything, any guidance on that yet?
Well, no, the only guidance so far is that if on June 30, so let's just say you're one of the early people in asking that question, so you're well into right now, you're already into your loan forgiveness, and that loan forgiveness will end before June 30. You'll probably have to wait till after June 30 to get your loan forgiveness, because there's that test on June 30 to see if you're restored. So that's the only thing I'm aware of, but it's an interesting question, because I think, if you after June 30 on July 1, if you shut down, there's no guidance on that. There isn't any guidance on that in the rules.
There's questions here about maintaining, if you aren't able to reopen because of local health laws, say you can't reopen your facility, if you're taking the loan out, you should still be paying your employees, or it's going to be a loan. I mean, that's kind of the purpose of it.
That's right.
Okay.
And I know people who have that, where the facilities have been shut down. Camps are an example. They're trying to find work for workers to do, right?
They're getting creative. And what's your gut feeling on camps reopening, Caryn, this summer?
I don't have a gut feeling. I listened to my camp director, my camp directors, and I know that they're hopeful that at least some, even if it's an X%, a substantial reduction in camping, they're really hopeful. And I know that a lot of church youth ministries are really hopeful too, that the camps can open. So I'm just praying that can happen. I don't have any insights.
I think there's a lot of parents hoping that camps are going to reopen. They could raise their prices dramatically after this quarantine. Is there a definition for utilities?
Yes.
Like propane. Propane, that's a utility?
I think propane counts as a utility. It's not specifically referenced, but gas is referenced and propane is a gas. So I don't see why that would not be a utility. That would be a utility.
Is a lease payment considered rent? Hey, let me address this real quick. In most rental agreements, there's a force majeure clause, and you'll want to review the rental agreements. We've had ministries that have been paying rent to facilities that they've been barred from accessing. And if you check your rental agreement, there may be something that says, hey, if you can't access it, you're not going to be paying rent during that time, and rent is waived during that period. So do double check and check with your attorney whether or not you're still obligated to pay rent during that time. Yeah, that was a building lease, so that's considered rent. Housing allowance or car allowance?
Car allowances, if they're taxable, count as compensation.
Okay.
If the car allowance is non-taxable because it's more of an expense reimbursement with some, some amount of recording done, then that will not count.
Okay. This is when we missed a payroll for our preschool teachers on April 30th. Can we include that payroll on the May 15th, double it as unemployment pay? That's kind of that back pay question again, where they just weren't able to make payroll. I would push it through, pay it, do what you can, try to justify it.
Yep, that's how I would do it too on that, in that case. That's exactly what I would do. But, you're going to want to just keep it on a separate line, right? Because it may not be.
There was a question here on the EIDL.
Don't ask me that one. Let's just skip it. If you want to ask me on the web, I'll look it up for you, okay? But I actually, unless it's a really basic question, I can answer some really basic questions. And most of the time on the IDLs, I need to go look something up.
Okay. All right, can we convert a 1099 contractor to an employee so our number of employees stay the same even though the job titles change? So is the SBA going to be checking people? And in California, most 1099 contractors are considered employees anyways. So that would be a good thing to do.
I agree with you. Totally agree. I think if you have a contractor that you can convert to an employee, you're reducing your exposure in a lot of ways. You're doing good things in multiple ways.
Okay. Yeah, Mark, I'm sorry we can't help you more on the idle pay period. Lots of questions about pay periods. More on that. Pay period, pay period, pay period. You've answered these live. What if somebody was already planning on leaving, or just kind of the natural flow of employees? You've laid somebody off before all of this happened, and you hadn't hired somebody yet. I think that's kind of that 75% cushion that's being used for other expenses.
Yeah,
I don't know.
The 75% is on the wages and salaries. Okay, so on the FTEs, that question.
Caryn, let me give you the specifics on this one, okay? This is just regarding pay reduction. What if an employee was already planning to move to part-time, half-time due to a baby? Will that still reduce forgiveness?
Yes.
And yeah, it will, but that's kind of why we have that little bit of a cushion there. So.
No, that cushion for the FTEs is just going to be what it is on the FTE calculation. It's, on the salary one, there's a cushion there, but the FTE is the one that's going to be having the most effect there. If somebody gets reduced, they plan to reduce from full-time to part-time. They did that during this period. And so therefore the FTE fell by half a person. It's a half person reduction, and it's going to fall through and affect your percentage of forgiveness.
Okay. All right, so here's one. Let's wrap up with this, but it says, can we hire maintenance workers who were not on the pre-loan payroll to attend to deferred maintenance during the 8-week period?
Are they?
You can add new employees.
Yeah, if they're employees, great.
Yeah. Your insurance company would be really happy to hear that too. So yes. Okay. Caryn, we still have some questions here. What I'm going to do is I'm going to take all of these. You and I will share them. and we'll plan another webinar when we have more clarity from the SBA. We'll invite everybody. I will email you, Caryn will email you, everybody that's registered and attended this webinar with some more resources. And we have a webinar set up for next week. It's going to be on HR issues, which will be exciting. Some of these questions that have been asked are going to be addressed in the HR webinar next week. And yeah, really good. Thanks, Caryn. I learned a lot. I appreciated it. And thank you very much to everybody. And I appreciate it very much. Got it?
Let me just say some final words here then, Charlie, if I may. I do think that, you know, this little saying is appropriate. Keep calm, because nobody else knows what they're doing either. So don't worry about it. Do what you can do. Do what you can do. Focus on what you do know. Focus on what you can do, and don't worry about the rest. We'll get more knowledge for you. I've been practicing thankfulness, so that's always good. And also, just Charlie, you know this, but just for the participants here, later today or as soon as possible, we'll update our website with the recording after you send it to us, and the presentation will go out there as well. And we'll also have a spreadsheet that'll help people with the budgeting. Okay, so it's great.
All right, thanks, Caryn. Thanks, everybody. Oh, go ahead. Be safe. We love you. We're praying for you, and we'll talk soon. All right, see you. Bye-bye.
Bye-bye.